What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be covering in this video is a brief Ortex AMC short interest and utilization update. Utilization has been a data point that we have been really paying close attention to over the last couple of weeks and months, and we've actually seen it go up today. And I would expect on Friday and on Monday, we see that utilization rating actually go up even further. Now, in addition to this, we also have to talk about that potential gamma squeeze that we were all looking for this week. We did see a significant price movement to the upside for AMC towards the beginning and middle of this week, but we have since come down from those higher levels. It is not out of the question that we see an aggressive price movement to the upside tomorrow, and we send a lot more call options going in the money. Now, we also have to talk about this Citigroup situation. So it's very weird what Citigroup is doing. What this new article that Citigroup has essentially put out says they are really bearish on AMC right now, but when you compare that to what Citigroup did with their AMC position in the second quarter, it honestly doesn't make a lot of sense. Now, in addition to this, we also have to talk about this developing situation that we've been talking about with Goldman Sachs and their outlook on the entire market. They've essentially doubled down on exactly what they've been saying and doing by liquidating 25% of all of their equity positions. And what they are saying now is that we are headed into a time where there are essentially going to be no real asset classes that are going to be picked as the winner. Now, not real asset classes in the way that you may think, but there are going to be some winners in what we could potentially see in this major market event that could potentially be coming at the end of this year. But again, nobody knows if this major market event is going to be happening in the near future, but all economic indicators and signals are suggesting something is really looming on the horizon for our financial markets. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button. So when we're looking at the price action for AMC today, at the current time that I'm recording, we're down about 7.6%, trading at $33.78. To understand what we're seeing today, we need to really look at what happened with the overall market yesterday and last week, specifically for AMC. So yesterday, we saw some Fed comments that were essentially talking about the tapering of asset purchases. The market did not like that because this is what the Fed has been using a lot of to prop up our financial markets. Now, if that is going to end, most likely the markets are going to see a correction. So the markets moved pretty quickly in this situation, but what we also have to think about, what is AMC specific, is that 14 million share block that got loaned out last week. So we didn't really see the effects of those shares going out on loan, and I would go out and speculate and say that a lot of those 14 million shares that we saw go out on loan previously are being used against us today. Now, when we take a look at an up-to-date Ortex estimate, we're seeing utilization at about, I think it's 91% now. Let's refresh the page to see where we're actually at. And when we refresh the page here, we can see that we're at about 91%. The short interest right now is at 18.13%, still incredibly high. Now, when we come over to Stonko Tracker, we can see that there's about 36,000 options in the money right now, and those are call options. There's an additional 12,000 at 34, but again, we had almost 100,000 contracts in the money at any given time about 2 days ago. That would really add to the buying volume that we could have potentially saw for AMC. So what we're really looking at going into tomorrow is if we can break above these levels right here, 34, 35, and even this 37 and 38 that we were trading at previously, because that is going to input a lot of buying volume into the stock. If not, we could see these institutions actually hedge to the downside, and that could add some more shorts. Now, getting into this Citigroup situation, Citigroup actually raised their AMC Entertainment price target to $5 per share. So AMC had its target price increased by stock analysts at Citigroup from $3.70 to $5 in a research report issued to clients and investors on Thursday. The firm currently has a sell rating on the stock, meaning that they are not bullish on this, but this is a very interesting thing to have Citigroup put out. Citigroup's price objective would suggest a potential downside of 86.32% from the stock's previous close. So from this excerpt right here and what Citigroup has put out in this price target rating, you would think that Citigroup is very bearish on AMC, but that is not the case. When we come over to Fintel right here, let's see exactly where this is. We can see Citigroup actually closed out of their put position right here over the last quarter. But when we come up higher, this is going to be Citigroup's equity position. They are now holding 61,548 shares, and they increased their position size in Q2 by 92.51%. This does not make a lot of sense. If Citigroup was bearish on AMC, why would they increase their position size by 92.51%? This goes along with a lot of what I have been saying about if there's any given situation in the market, you are never really going to know what the actual intent or reasons behind what any entity or individual is doing unless you are sitting right across the table from them and then you know that they are giving you an honest answer. Now, when we think about this in the grand scheme of things, 61,548 shares is not that much, but Citigroup also is acting as one of the prime brokers for a lot of these shares going out on loan. They were one of the institutions that I believe cut off the ability to short after the June run-up. So there's a lot more things working behind the scenes in this situation that you need to be aware of. So let's get into this Goldman Sachs situation and the full implications of why they are saying exactly what they are. When we come over to this article from Zero Hedge, here comes stagflation. Goldman slashes GDP estimate for the second time in 3 weeks, sees a bigger inflation surge. So now what they're referring to here is real GDP. Real GDP takes into account or actually not discounts, but takes off the inflation metric from the nominal GDP. If we are expecting to see inflation increase, we would expect to see, if all other things are held equal, that the real GDP would end up decreasing. So what we are seeing here is, since Goldman Sachs is really looking for inflation to come up, as we can see here, but while Goldman's expected 2021 slowdown was manageable, it got far worse in 2022, when the sluggishness is expected to truly hammer the growth rate, basically, of the U.S. economy, which Goldman now expected to shrink to a trend like 1.5 to 2% by the second half of 2022, a far sharper deceleration than consensus expects. So what really happens when there's stagflation? Well, equities go down and the cost of goods is still going to be very expensive. So what we would see is that basically investments like stocks and bonds would continue to decrease. So there's really only going to be a couple of safe havens in the market coming up in the near future. Now, one of those safe havens that I see a lot of investors going into and actually starting to go into over the last couple of weeks and months is gold and other commodities like gold. Now, we've seen a couple of institutions such as Credit Suisse liquidate some of their portfolios and actually go into gold, but we also saw a very interesting one happen throughout this week. We saw Palantir Technologies said it's preparing for another, quote, black swan event by stockpiling gold bars. We used to talk about Palantir a lot on this channel. And they're in the business of data analytics and projections. So if they are running projections and expecting more black swan events to occur in the future, like a major market disruptive event that could cause stagflation, it would make sense for them to protect the money that they have, preserve their buying power, and go into assets like gold. The company spent $50.7 million this month on gold, part of an unusual investment strategy that includes both startups, blank check companies, and possibly Bitcoin. So this is a little bit unrelated from the AMC situation, so let's bring it back. When we are thinking about the overall market, we know everybody is wildly over-leveraged. We've started to see this wave of deleveraging start to happen over the last month. In July, the overall margin debt actually decreased. It was headed towards $900 billion and actually started to come back down. We are seeing on September 1st the uptick in the margin calls from the National Securities Clearing Corporation as a part of their Phase 5 uncleared margin rules, and that has to do with these OTC derivatives. When we are looking at the OTC derivative exposure, I've seen numbers as high as 168 trillion for all of the top 4 commercial banks, and I've even heard speculations that the derivative exposure of all institutions could be upwards of $1 quadrillion. So that just puts it into perspective for you as to how over leveraged a lot of these institutions are. And again, we know a lot of institutions are over leveraged on AMC. So when we see these major market events start to happen, it really is going to depend on who gets margin called first. Is it going to be the shorts on AMC, or is it going to be the longs in other positions? So when we think about that dynamic, if we were to see the market event really start to take off before AMC started its squeeze, we've gone over this in the past. It's not something that I really want everybody to be that worried about, but I view it as the final shakeout or the final boss before we would start to see the shorts cover. Imagine we are starting from a baseline where we are at right now for AMC. We could squeeze from right now, or the shorts could add more to their position, basically push the price down even further and start the squeeze from a lower level, but they would have more short positions in which they needed to cover. So the height of the short squeeze really would be unchanged. The starting point would just be slightly different. So that is going to wrap up this update that I have for you guys on AMC. In tonight's live stream, we are going to be going over that Brazil situation. So make sure you guys stay tuned for that. But that is going to wrap up this update. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button. So I hope you guys are having a great day, and I'll see you guys in the next video.